right? So I said that for building financial models, financial models are built mostly on Excel. And then to build this, you need to have a full understanding. You need to have a very good understanding of formulas on Excel, right? For building financial model, these are some of the formulas you need to understand to be able to build financial model. You need to understand VLOOKUP, HLOOKUP, choose, amongst other functions you need to understand. These are just some of the key and important ones you need to understand their purpose and their use, right? So moving on to uses of financial modeling. So we've talked about this indirectly, right? But just to re-emphasize and then go talk about the uses of financial modeling in more details, right? We'll jump into this quickly. So the first is profitability planning, right? So as a business, you want to plan your profits, right? So you have, let's say, you have 100 million in equity for your business, and then you have 100 million in equity, and then you're selling, what can I say? You're selling, let's say, chairs and tables, all right? And then let's say each of the chairs and table you're selling, let's say you're selling a dining table set of chairs and table. Each of that goes for, let's say, 500,000 naira for a set of table and for a dining table and let's say 6 chairs, right? So you're selling that for 500,000, and then the cost of making that is, let's say, 400,000, and then your profit margin is just 100,000 per chair, right? And then you also need to pay the carpenters, the designers working on these chairs salary, right? You need to pay your rent. You need to pay for internet. You need to pay for if you need to pay for an office or for a workshop where the chairs will be constructed. You need to pay for the cost of carrying these chairs to the customers, right? So all these costs, right, might become overwhelming as situations change. Maybe as different situation changes, right? The prices of some goods might go up, the prices and the price of goods might go up, the price of your rent might increase, right? And then as these situations happen, you now want to see how you need to increase your profit, or you need to increase the amount you're selling your shares to be able to balance these things, right? You need your financial model to help you with this, right? And having a financial model helps you plan your profit better, helps you plan your cash, how your cash is coming in and going out better, and helps make your business more sustainable. Another reason is, as I said, so cash. Without cash, your business is dead, right? And for example, for companies, some companies might have, so you have your equity and you have your debt, right? So equity is the shareholders fund in the business, and then you have the debt, right? So the debt is the amount you borrow from banks, the amount you borrow from financial institutions and the like, right? So you always want to keep track of your debt. You don't want a situation where your company goes bankrupt or where your company can't service its debts, right? And then if you don't pay attention to these things, right, just the daily operational activities of your business, like attending to customers, making sure the products are quality and delivered on time to customers, paying your rent, making sure talking to staffs and making sure they are doing their work if need be, and all other nitty-gritty operational activities that you need to pay attention to might make you get carried away from monitoring monitoring your cash flow ideally, and then this might make you now be defaulting on your debts and then having to pay more interest on your debts, and this might now affect your cash flow, affect your profitability, and start affecting your business performance, right? So you always want to build a financial model that within a few seconds of going in, you can see how your business is performing in terms of liquidity. Another reason is decision making, right? So as a CEO of a company, as a CEO, as a CFO of your company, you want to know that, okay, there's an opportunity. There's an opportunity. Let's say, what example can I use? Okay, let's say, just using a very fun example. So you're Dangote, right? You're Dangote, and then you have a big cement industry. You have a big cement factory, you sell cement, and then one of your competitors, let's say BUA, for example, though they are performing well, now fall into, let's say, some financial challenges or are not doing so well, right? You want to now determine, is buying BUA at this point in time going to be good for our business over the short to long term or not, right? So you can't just assume that, okay, because you made 100 million, because as Dangote Cement, we made 100 million, we made 100 billion naira in profits last year. So we have good cash, or since we have made 100 billion naira, we're in a good financial position. Now we can buy BUA easily and still operate steadily. You might be wrong, and by making that decision might just spoil the business entirely and then make it have financial problems, right? Before taking that kind of decision, a financial model helps the CFO or the CEO to analyze the key metrics that they need to check and confirm and key, or check that once they buy BUA, they will be able to still operate efficiently, still maintain their cash flow properly, and be able to still maintain at least the amount of profit they're making, or even better, right? So a financial model helps CFOs, CEOs make these decisions correctly, right? And then for companies trying to considering, okay, should we build a new factory? Should we build a new factory or a new plant or not? Should we do this acquisition? Should we sell this factory? Should we not sell this factory? Those decisions are what financial model will help you. A financial model will help you make easily and without making any mistake, right? And then another purpose is for valuation purpose, right? So for example, for options, for bonds, you need to value them as time goes on, right? And even for mergers and acquisitions too, you need to value the company you're looking at buying and value it correctly to know the amount of consideration you need to give. And the financial model helps you achieve this, right? Moving on, another use of financial model or a financial model is for budgeting, right? So your company you expect you expect to make a certain amount of money at the end of the financial year, and then you need to spend some money on some key things. You need to spend money on the cost. Obviously, you need to spend money on the cost of your raw materials. You need to spend money on salaries. You might need to spend money on sales and marketing, depending on your products. You might need to spend money on administrative expenses. You might need, if your company has some debt, you might need to pay your debts, right? And then you might need to pay for supply chain and all those kind of things. And even if you have capital projects going on, you might also need to consider, or you might also need to allocate some money for that too, right? And then allocating money to these things efficiently makes your business flow smoothly, and then your financial model just helps you track the actual performance with the expected performance you had thought at the beginning of the year. And then based on this, you can then easily know the gaps and make the right decisions on how to make sure the numbers are aligned, right? A financial model is also used for capital raising, right? So as an investor, someone comes to you, or you're an investor, or you're an investor, right? Or you're trying to speak to an investor, either you're an investor, you're speaking to an investor, and you want, let's say you're the investor actually. So someone comes to you and then comes with a very nice, lofty idea on what he wants to build, maybe a manufacturing company, a tech company, whatever he wants to build. It comes to you with his lofty pitch deck and information memorandum and all that, right? But that's just stories, right? It's good to see the stories, but you also need to see the numbers, and then seeing the numbers now help you look that, okay, if I was to put, let's say, if I was to put 5 million of my money, and you know it's an ed money, right? You put in, let's say, 5 million of your money in that business, how much would you be able to get in 5 years, right? A financial model helps you have a sense of that, right? That's one. Two, a financial model helps you understand how the business owners are trying to actually implement their business strategy in a granular manner and in a numerical number, right? And based on seeing the numbers, you could see based on your experience in the sector if the numbers actually make sense or not. And then based on this and the expected performance of the business, you can now make your decision on whether you want to invest in the business or not. All right. And then finally, here I have investment research. Right. So you as a company or as an investment analyst, right? So as an investment analyst, there are some metrics that you might want to forecast the expected numbers of these metrics in the future, right? So a financial model helps you forecast, for example, if you're working in an equity firm, an equity research firm, what's the likely performance of this stock in 3 to 5 years, right? So building a model helps you analyze based on the inside information you're able to get as an equity research from the company. You can now build a model to see what is the expected performance of this business. And based on that, you can now advise your clients on whether to buy the stock or not, and to know when to sell or not, depending on the amount of information you have.